Nothing is more destabilizing than war, and crypto fell almost 4 times more than the stock market. The current market cap of crypto currently sits right around 1.57 trillion, down from a high of 1.77 trillion. So, what happens from here? Hello Cavaliers of Crypto, and welcome to AB Crypto, where we take a simple approach to break down the latest and most educative topics about the cryptocurrency market. If you're new to our channel, just hit that subscribe button below and hit the notification bell to receive any new video updates. You can also follow us on TikTok at _AB_crypto_, and if you want to read some more about today's topic, you can get the links down in the description below. So let's get started. Over the past few weeks, as Russia has invaded Ukraine, a lot of things have happened. People lost their lives, people have been displaced, and there are just too many other catastrophes to count. We have also witnessed sanctions that have greatly impacted the global economy. So now, where will crypto prices go from here? And will the demand during war prove crypto to be the ultimate safe haven asset? Well, let's go and see. World war has hogged most news coverage over the past couple of weeks, so we can't forget about some of the extremely important events that are also taking place right now. Of course, we are talking about the Fed's monetary policy and how this is likely to impact the global financial markets. The Feds are set to meet for their much anticipated March meeting in a couple of days, and we think it's fair to say that it is one of the most important meetings since the pandemic began. In this meeting, we're likely to get a sense of how aggressively the Fed is going to try and control these different monetary stimulators. This all began last year, where it appeared that we were due for a hike in interest rates. Before the invasion of Ukraine, the consensus analysis estimate for an interest rate hike was 0.5%, and there were also estimates between right around 5 and 7% of rate hikes throughout the year. This is also lined up with US interest rate curves, and however, after the invasion, there were many complaining that the Feds were likely to hold off on any hikes in March. We thought that the Feds would act in the period after the invasion, as there was a chance of a 0.25% hike. This was later confirmed in their final meeting before the blackout period. Federal Reserve Chair Jerome Powell stated, "I am inclined to propose and support a 0.25% interest rate hike," and many other federal officials also thought that this was the appropriate course of action. And so it appears that we are all going to see that long-awaited interest rate hike. So how does the crypto market react from here? Now, of course, how the markets react will depend on whether anything might pop up to force the Feds to change their action. And one of the most pressing concerns for the government right now is not the Russian invasion, but inflation. If inflation is higher than expected, this could mean that the Feds may be forced to act more aggressively and raise interest rates faster. And higher interest rates means a sell-off on risk-owned assets. For example, Bitcoin. Since the invasion, oil prices have skyrocketed, which has led to higher gas and energy prices, and thus higher prices of goods and services as production costs have gone up. This means that it currently costs even more to mine crypto. And even beyond energy, the sanctions are likely to impact the prices of food and other raw materials. Also, we should expect crypto to take a dip along with the other financial markets as inflation and rates rise. But, as was the case with the sell-off right after the invasion of Ukraine, these effects are not based on fundamentals of crypto, but real-time events. Always keep in mind that the fundamentals will remain strong and outlast these different world events. And as we have discussed throughout our channel, crypto has been seen as a piece of tech that can protect the purchasing power of those directly affected by world events like the Ukrainian people, and in turn, it could be a safe haven asset for those indirectly impacted, which is likely to be a lot of people around the world. Well, this brings us to the end of today's video. We hope you guys found this video resourceful and entertaining. And if you have any more information to add to improve to the content in this video, please do so in the comment section. Don't forget to subscribe to our channel, and if you loved watching this video, send us those likes. We thank you guys for watching and see you in our next video.